Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. We're here for the A1 Trading Show Monday through Friday, and we, as you just saw, we got 20% off with that promo code A1T20. If you're interested in DNA Funded, if you're looking to get funded this year, check them out. Take that promo code with you so you get the discount. Check this out, guys. We did get some lower than expected numbers just now here on the ADP non-farm employment change number. This is still showing what we have unfortunately been seeing in the U.S. labor market, which is slowdown in the Department of Labor, right? Just in general, we see that kind of consistently being a theme. So ADP numbers came in soft. The NFP report, of course, tomorrow is the big one this week, but we've had a string of labor data that has not been super impressive. JOLTS job openings this week was soft. We get unemployment claims in 10 minutes, so that will be interesting. But yeah, there was, let me see if I make sure I got all of it right here. Revisions were pretty unchanged, 54K compared to the forecasted 73K. Manufacturing PMIs yesterday were not very impressive. So you have this combination and you say, okay, well, we've got a difficult circumstance here. We have labor data slowing and inflation is still not near target. I mean, it is in the sense that it's within the twos, but we're not at that 2% target that the Fed kind of has reiterated over time is their primary goal. Stocks yet again have had a bounce back year, pretty impressive one at that. We talked yesterday about the monthly chart. I thought that was a really interesting conversation. I enjoyed doing that. In fact, I want to make sure that the monthly chart is actually added to my favorites. I mentioned that if you're somebody who's watching the indices, keep an eye on your your monthly chart. We still have a really strong upward trend. And when we take a look at structure, I mentioned yesterday that we've had a series of just looking at the monthly candles, higher highs and higher lows, right? Just look at the candle sequence here. You have a bold trend. And I made the point that if you're really somebody who is outright bearish on something like gold or S&P, these things that are kind of melting higher, you would need a break of this structure, in my view, to really stand on something more firmly in terms of, okay, I think there's going to be a larger scale correction. So if you're somebody who's saying, you know, stock market's going to roll over, then you must be way smarter than the rest of us because the stock market is trending higher, right? So if and I say that jokingly, because you may be right. We may be closer to a top if you are bearish on the market. But for me personally, it's hard for me to say like, oh yeah, no, there's a short trade coming unless we were to break this structure that we see looking left, right? If we're looking left, we can see that higher low sequence would be broken if you were to get a break below 6,200. So if you're watching indices, that to me would be a trigger for downside. Now, if you see the opposite, you see a break through the highs, then the path of least resistance, in my view, would be to see a continuation of the theme, which is buying, buying, buying. Of course, we'll also do this on other markets here. I said I would do it yesterday on gold, and I did not. Let's look at gold. So gold has not been so obvious for a little bit. In fact, for the monthly chart for a while, you've had consolidation. But at the end of August and into September, we've had something pretty cool happen. We've had the theme of higher lows and higher highs, right, resume. So we all this trading between May, July, August, May, June, July, and August, we essentially had this chop where we didn't really make a decisive move, but we ultimately resolved this to the upside, right, instead of to the downside. And so this huge body candle or this huge full range candle got broken to the upside. And to me, that signals that gold, after all that consolidation breaking out, has room to just continue to chug along. Now, does gold have to go straight up? No, it could pull back, and it could still be, in my opinion, considered a fully healthy pullback, even if you did get a full corrective move back down to 34.30, let's call it, right? That's still a pullback within the context of what has been a huge longer-term consolidation, breaking out to the upside, pulling back. To me, that would be a bullish area. So if I'm looking at gold, let's take a look at the candle here today. Once again, we have something interesting. You had an attempt to break that structure, but buyers are stepping in today. Buyers are already back. That was possibly all the dip that we're going to see today. Again, maybe not, but you can see that gold has had 1, 2, 3, 4, 5, 6, 7 green candles in a row, nothing but buying. And the first time we get some selling, in comes ADP numbers, weaker than expected, and we are reminded why gold is bullish in the first place. Jobs data weak, inflation high. Don't get it too complicated. Keep it simple. Look at the fundamentals. Gold is very bullish on the EdgeFinder. Why? Macro data, technicals, sentiment. We have alignment. Do not fight this because you will do so likely at your peril. If you are fighting a breakout in gold, if you are fighting the fundamentals, which tell you inflation is high, jobs data is weak, that's gold's sweet spot. It's like trying to fight Mike Tyson in his prime. You don't want to fight Mike Tyson in his prime. You want to challenge him when he's really old and can't, do what he once could. No shade at Logan Paul. Or was it Jake Paul? Who fought Mike Tyson? Why am I forgetting who it was? I think it was Logan, right? I think so. No, I can't remember. Anyways, I don't really pay too much attention to that stuff, but I know it was a huge fight. So, anyways, also, this is fascinating. The S&P 500 is getting a bearish rating on the EdgeFinder. Very, very, okay, so it was Jake, sorry. S&P 500 getting a bearish reading is super rare. It's super rare for the S&P on the EdgeFinder to get a bearish reading. Why? Because the chart's been going up. It's been trending higher. It's been a really strong chart for some time. Now, I don't love the bearish case just because I just mentioned on the S&P 500 monthly chart. I'd really like to see this thing break structure to some extent before looking for any sort of bearishness. Not to mention this thing is still in a very strong overall uptrend. It's not something I have a lot of conviction on trying to short, but I do think it's worth paying attention to. You have DAX, Nikkei, and S&P getting bearish readings on the EdgeFinder. That is super concerning. At the same time, you get gold and silver getting bullish readings. I, mention this all the time in my trading and in my videos. I'm a systematic trader. What I mean by that is that my rule set is hard-coded in the form of the EdgeFinder, right? This is, I guess, not necessarily every aspect of my trading is super hard-coded, but the logic behind what I am looking to buy, what I am looking to sell is hard-coded within the EdgeFinder. The EdgeFinder's top setups page essentially looks at technicals, sentiment, and economic data and gives me an overall score. From that score, we derive a 5 or greater reading as bullish, a -5 or lower as bearish. Now, if we take in consideration neutrals, you can see we have all the neutrals in here. They're just not getting strong enough readings to give us sort of a conviction. So as far as I'm concerned, when I'm looking at my watch list, I really only want to see things that have strong conviction. So what do we do with silver and gold, right? So I know a lot of people are obviously watching it. If you're not in the move, here's my opinion. There's nothing you can do but wait. I am not in the gold move. I'm long silver, which has actually done better in terms of a percentage gain basis. Taking a look at the 4-hour chart here, here's where I'm at with it. I've trailed my stop loss. We have, again, the setup. Same as what was happening over here. If you were tuned in a couple days ago, as soon as this candle printed and we started bottoming out, I mentioned if we can break through these highs, I'm going to trail stops. We did that. So we trailed stops. Stops are locked in at $40 an ounce on silver spot price. We are again setting up where we've got a supportive base level, and I would like to see if this thing can take out the prior highs. I will trail stops again. Nothing fancy, nothing confusing, nothing overcomplicated about what we're doing here. We are aligning on this channel technicals and macro. That is what matters to why markets move. Gold and silver are not rocketing just for fun. They're rocketing because people are worried about government debt. They're worried about inflation, and they're worried about labor market data coming in soft, right? What's the swap rate like on silver? I don't know. I don't trade CFDs. I trade, although I'm looking at the spot price of silver through XAG USD, I actually trade personally SLV, which is an ETF, and the holding cost is very low. So I don't really pay like overnight fees for holding this very much. There is an expense ratio, but it's very low. So, which is definitely advantageous if you're a longer term swing trader. CFDs, that's the downside, is they are leveraged products, so there's cost to holding them. So yeah, we're gonna, as far as silver goes, we're gonna chill. I'm just gonna wait and see what happens next. If this thing wants to swing back and just chop around, I'm okay with it, right? I don't mind. I don't need to. I'm just going to keep my stop where it is. But if we can put some sort of higher low here and take out the highs, right? A higher high breakout gives me cue to go ahead and trail stops. Now I'm not in this gold trade, but it would be the same thing. If I had caught the long on gold, same thing here. I'd be looking for a structure break through those highs. If that happens, stop goes here, right? Really simple stuff. I know I keep saying that, but it's because a lot of people want to make things so complicated and overthink everything within their trading. But for me, it's just like, look, the trend is up. I want to stay with the trade. As long as the trend is up, how can I define where the trend is down or failing at least to continue to go up? I need to look for structure points where there's been key responses, right? So we're sort of seeing a response here, but how can I know this is a response? Well, once we break through the highs. If we break through the highs, then this was a clear V move at this level, at which point I can trail a stop. Does that make sense? Again, the magic is not in the trailing stop method. Technical side of trading is really easy. Support, resistance, trail stops. You don't need to get complicated. You don't need a whole bunch of fancy names for everything. Support, resistance, market structure, trailing stops, that stuff is not the hard part. We want to make sure the bigger picture is on our side. We want to look at the macro. So we have, let me not miss the news here. We got 20 seconds to go until we get unemployment claims data. I'm just going to pull up the chart here so we can take a look at everything, see if we get any major market reaction here. About 10 seconds to go. Unemployment claims, like I said, coming out in just a moment here. Still waiting on this unemployment claims. No major market reaction, at least as of now. Yeah, nothing too big. 237, is that right? 237, so came in just around expectations. I'm not sure what's going on with Forex Factory, but Roberto has got us in the chat. 237, thank you, Lee. Okay, so 237, there it is. Okay, so actually, I'm sorry, slightly higher than anticipated. So we have slightly higher than anticipated unemployment claims here. In combination with a weak ADP number, in combination with a slowing JOLTS job openings number. We'll see what comes with ADP, guys. I'm sorry, NFP tomorrow, guys, but it's not been a great week for labor data. I can tell you that much. It's not been a great week for labor data. And so, again, you have this interesting story where metals continue to look attractive. Remember that metals love rate cuts no matter what. Stocks don't always love rate cuts. I know that can be a little confusing. In theory, stocks love rate cuts, but a lot of times the symptoms of why you would need rate cuts are also pretty ugly. So for example, if you need rate cuts because the labor market is really weakening, if that's what's happening, gold and silver love that, but stocks do not love that. If you're getting rate cuts because inflation has cooled off a little bit, but the economy seems to be holding up, stocks love that. And gold is like, okay, we'll still take the rate cuts. That's the way to think about this. Rate cuts are almost always positive for metals. Almost always, right? So again, that is why to me, the easier trade than anything else is just to stay long metals, trade them long, and the trail stops. Now, again, I like them long, but it doesn't mean I'm just going out and leverage buying, because I'm telling you what, there's going to be a pullback at some point, and I'm going to get a bunch of comments. This happens every time. People said, Nick, it just looked like it was going to go up, so I bought it, and now it's going down. And it's like, you can't just buy what's hot. Google is a stock that I love and own. I sold calls, which kind of stinks because I'm capped on my upside. I bought this stock back here. Nobody loved it. Now that it's up, everybody wants to buy it. Same thing with gold right now. Nobody cared about gold over here, myself included. I was like, this is boring, And then finally, we started to see the momentum building. We actually saw it in silver. Go back and watch our streams. We were talking about silver a lot more. Silver pulled back. I took the long, and this thing has just erupted to the upside. So what do you do with this? Well, if you have metals markets on the run, chasing is a really dangerous game because you could get sharp corrections. And so those sharp corrections, though, if you are truly genuinely bullish for a good reason, those corrections are opportunities, right? You probably had some intraday traders who already took this opportunity to buy the dip. There may be an opportunity to see a swing back down to 34.30. And again, if you are chasing right here, guys, think about what that would do to you if you are chasing with big position sizing. As you can probably imagine, this would be a painful drop. And that's just a healthy pullback. Do you see what I'm saying? If you're somebody who's like, oh, I got it, gold's going up, I'm missing it, and it's horrible, right? Well, look, if you have to ask yourself, where am I going to put a logical stop loss on this one, right? It's unlikely to do this kind of move and just keep doing that move, right? It is unlikely that you're going to get, some kind of just never-ending upward movement in gold. You're going to have pullbacks. So be careful that just because, okay, yes, it's going up, does not mean that it can't have a sharp pullback in between it going up, right? How often does that happen? Well, often. Even in big moves, you had this big move up in gold, really good, sharp drop, and then it just erupted, right? Sharp drop, and then it shot back up again. So don't, think that just because it is moving like this, that is how it's going to move for the next, 6 weeks. Maybe it does. That would be awesome. But it's unlikely to be the case. It is likely to pull back. It is likely to have corrective moves. Again, it may shoot up and then pull back. I'm not saying, oh, it's going to come down today. I'm telling you that if you're bullish, be constructive, be patient, wait for the trade to come to you. You cannot chase, because if you do so, what's going to happen is you're going to get super emotional with your trade. You're going to oversize it. You're going to do something stupid, right? Don't do that. Okay? So when it comes to gold, when it comes to silver, when it comes to the metals, again, they are the spot to be, but it's not just what you trade, it's what price you get it at. You can't chase stuff into trading success. I've just never seen that be a consistent model for anybody that makes sense. You got to wait for trades to come to you, build a trade plan, make sure you're in alignment. Again, critical. Make sure you're in alignment with the fundamentals, which have suggested labor data cooling. Oh, by the way, I got to show you guys this. Check this out. U.S. economic heat map. Okay, so this is pretty cool stuff. We added these little sections here. Now I still got to refine them just a little bit here. But what you're looking at here is you have, and I think the calculation is slightly off. Let me check this. Okay, so we have Jolt's ADP. Look at that, ADP came right in here this morning. Missed expectations. Manufacturing PMIs yesterday or 2 days ago missed expectations. I need to make sure this is calculating correctly because it looks like it might not be. I think this is upside down right now. Jobs should be 40% bullish. Most of these things are actually bearish. You have 3 signals for bearishness: ADP, non-farm payroll, and Jolt's job openings. I just added these yesterday, so I'm going to write that down right now to check the calculation. So just give me a second. Check meter calculation. I think this is wrong. But what this will do in theory is we have 3 meters here. We have the growth meter, inflation meter, and jobs meter. Now, these meters are just looking at the grouping here. They're looking at jobs data and giving us a score. Now, again, I think this is flipped. It should actually be 40%, and so it should actually be right here. I'll have that corrected if I am correct in thinking that that is how it should be. But we have, again, Jolt's job openings, missed expectations, ADP missed expectations. The prior NFP report, which is the latest available data, at least at this time, missed expectations. Jobless claims, once this updates, that will be even, this is not yet updated. Once that updates to the September 4th number that we just got, you're looking at more negative jobs data. This heat map is considerably weakening. We also have growth metrics very much in the red, manufacturing PMIs. We get services PMIs in just a little bit, retail sales numbers. Keep an eye on this meter because it's very, very important that you are in alignment with the fundamentals, because if you're not, again, you're doing so at your own peril. You're fighting the wind. So understanding the simple concept of, is the economic data in my favor or against me, can help you to find opportunities in markets that may be more favorable to you. Does that make sense? So that is my thought, is that's why the metals continue to look so, so good. You have the data weakening underneath our feet, and so people are rushing into metals. Simple concept, but I wouldn't be able to spot those opportunities if I didn't have the data in front of me. Okay. And so that also makes me very nervous about stocks. You have all this data weakening and people are like, yay, rate cuts. That's why the market is kind of excited. But what if it's not so yay rate cuts? What if it's rate cuts because things are really getting ugly out there? That could get really ugly really quick. And if you truly see unemployment rate go up, like if you actually see this number, let's go look at it. We can pull it up. Why don't we? If I take a look at the unemployment rate in the United States and we say, okay, this number's climbed, but it's stabilized around 4.2. What if that's not stable anymore? What if we start rising? If people start to actually lose their jobs and we see employment data start to materially weaken, what does that do to the story? Well, that would be the basis for true recession. Recession comes from people not having jobs. Right? Inflation hurts, but if everybody has jobs, they can kind of stomach it. What we haven't had in the last few years, we haven't had unemployment rate rising dramatically. Part of the reason we've held together pretty well is because unemployment rate has remained relatively low. 4.2% unemployment rate is low, but that can change. And we're seeing, in my opinion, a mix of data that could suggest unemployment could go higher. So that is why when we look at the dollar, I am pretty bearish on the dollar. When we look at stocks, I am pretty cautious on stocks. I sold my NVIDIA yesterday. So again, not shorting NVIDIA, but I sold my NVIDIA shares yesterday, which is big for me. I bought NVIDIA down I bought it in April. I did really well on this move and I closed the trade for a profit. To raise cash, and because I think, again, love the company longer term, but I think it's back to being very expensive and that there's a lot of hype out there. And, again, I still own a lot of other stocks. I own Google, I own Amazon, but I just decided to raise some cash in the portfolio and have consistently done that for the last few weeks. So my thought is And I've done okay with that, because what I've done is I've taken profits on some stocks and I put them into silver, right? So I took a good sized position in silver, which has been so far working out correctly. And I'm just trailing stops on this trade that I've got. So yeah, we'll see. And then of course there's the worries about, as Lee brings up, the Supreme Court stuff with the Trump tariffs that could of course cause some serious concern for markets as well. But to me, it's like I would really just focus, for me personally, it's based on the data that we're seeing, which suggests, again, some softening in the US economy. And so that tells me, okay, I really don't, I want to be more on the side of bearish dollar. So, to me, I'd be more willing to sell the dollar on rallies up into the top end of this range than to buy it. So again, I know I'm very kind of somber today, or negative, bearish, whatever you want to call it. But I'm not shorting the market. I want to reiterate that. I have to often, because people sometimes be like, how does it, the market will pop and they'll be like, how's it feel being short? And I'm like, I'm not short. I own a bunch of stocks. My portfolio follows, to some extent, still there's correlation to the S&P 500, because I still own a lot of stocks. But I'm in the process personally of buying stocks that I feel more comfortable owning if the market were to be in a down market. So for example, some utility stocks, things that are a little bit more defensive in nature, that, can pay a dividend. I can sit and hold on to those things if I think that there's going to be some sort of market pullback. Again, I'm not short the market. I'm not betting that it's going to drop. I'm just playing it safe, because I think that after, a 45% run in the NASDAQ, or whatever it's been, let's see, 46% run in the NASDAQ, I think it's okay to say, okay, I'm going to take some chips off the table and take profits on stuff, and carefully wait for a better opportunity. So again, that keeps me very much watching the metals. And again, it's all systematic in the sense that the reason is right there. I respect heavily the scoring system that we've built enough to listen to it, right? If gold and silver are screamingly bullish on the EdgeFinder, I listen to that, right? I pay attention to that. If this thing were to fall off, if score were to fall off and price were to reverse course, then I'm willing to completely say, hey, take profits on gold and silver. I'm out of there, and I'm going to wait for a better opportunity. But right now, we follow the momentum in price, the momentum in fundamental data, which is showing some cooling off in the US economy. And that, to me, makes the dollar index look bearish. It makes gold and silver look attractive. Euro dollar getting a bullish reading, Aussie dollar, Kiwi dollar, right? If we just take a look at metals and majors, all of this is based around one idea, which is dollar bearish. And that's been the correct play the last few weeks. We've done really well on this. I took longs on euro. I took longs on the pound dollar, longs on silver. So keep it simple. Fundamentals, sentiment, technicals, that's it. And having a system in place, having something that's repeatable like this, is so powerful, because what it does is it makes it so that I show up to the desk and most of the work is already done for me. I just need to analyze and kind of check boxes, place trades, place stops, manage trades that I'm in, etc. So yeah. By the way, if you don't have a copy of the EdgeFinder, here's your chance to pick it up for 45% off. If you are watching the stream right now, we are doing some super discounts for live stream viewers. Check it out. We'll drop a link here in the chat in just a second. So if you click this link, I'm going to put this in here. Here it is. Get 45% off by chatting with our support staff, clicking this link here. Couple things about getting access to the tool. It's a one-time payment. It's not a subscription model. So you don't have to pay us every month. You pay one time. It's nearly half off right now, which is a huge discount. And it gets you access. Like I said, it's not a yearly, it's not a monthly. You just pay once, and then you get access to our tools. We're constantly increasing what we're offering within the tool. We're constantly improving it, so on and so forth. So if you're interested in getting access to the EdgeFinder for 45% off, click the link that's just been dropped in the live stream chat to speak directly to our support staff about getting a copy. With access to the EdgeFinder, you get access to, of course, our top setups page. You also get access to all of our different screeners. You get access to things like the put to call ratio. You can track institutional activity through our commitment of traders data and commitment of traders data history tab. You can track our smart money indicator. You can look at the Bitcoin to gold ratio. It's sort of your all-in-one box, a tool set to analyzing markets on your own. Now, again, you can spend all day long watching YouTube videos, reading articles, reading news headlines, or you can use a tool that puts it all in one place for you. And better yet, doesn't just put it in one place for you to look at, it actually outlines what the data is suggesting. So don't miss your chance. There's 45% off the EdgeFinder for a limited time. The link to get access is in the chat right now. Simply send a direct message to our support team on our website, a1trading.com. The link to do so is right there in the chat for you or in the description of this live stream down below. Okay, so stock market opens up in about 45 minutes. We also get services PMIs later on today in about an hour and 10, which will be really interesting to see what that does. The VIX popped a little bit, dropped back a little bit here, so nothing too interesting on that side of things. So I'm sorry, oil moving back down. I didn't take this trade. Obviously, I wish I had, but I also don't wish I had because, again, I stay systematic. EdgeFinder no longer had the bearish reading on oil, so I missed or skipped on that trade. Obviously, it's moving lower, and you're not going to catch everything perfectly, but the technicals do make sense, right? You had a pullback into this resistance. Sellers came in strong, and I guess the next wave for oil traders is, can you actually break through those prior lows that we've seen the last few months? So we'll see. So if I'm looking at this here, another thing I wanted to look at with you guys was the investor sentiment survey. This does make me a little bit, I don't know how I feel about this. Let's just read it. So the AA Investor Sentiment Survey, AAII Investor Sentiment Survey, what this does is it surveys individual investors asking their thoughts on where the market is heading in the next 6 months. And what's cool about this is that with this tool, we can see over time what crowd sentiment on the stock market is, which is a great barometer of risk or a risk on or risk off sentiment. So check this out. The latest filing still shows heavy bearishness. So we have 43.4% of respondents saying they are feeling bearish on the stock market. Only 32.7% are saying they feel bullish. Now, what does this tell you? Well, it tells you that there is still pessimism around the stock market. And so pessimism around the stock market tells me that you could actually still see a continuation to the upside, as a lot of people are still betting against the market. And if there is sort of another run to the upside, those people could capitulate and start to get bullish, right? So sometimes you do get that where when people are still bearish, there's room for the stock market to move higher. That is one of the predominant reasons why I don't have an interest in shorting the market. The other one is really simple. The chart's in a strong upward trend. If this thing were to break higher, I think you'd squeeze a lot of the people who are bearish into capitulating, buying into the market, etc. And again, if you want to talk about a bubble, I've seen a lot of people excuse me. I've seen a lot of people, saying, this is a bubble. It's all gonna crash, right? And I actually, I know I've been really cautious about the market here today, but I don't think that we're on the precipice of some giant crash. I do, however, think that we are due for a modest correction or pullback. I could see a 5, 10, even 15% pullback. That would be healthy for the stock market. But do I think that's the top of the bubble? No. Typically, when you see the top of a bubble, this number would be much higher. The put to call ratio would be way down here. right? If everybody was buying calls and you had investor sentiment incredibly optimistic and bullish, and the price action on the chart was just extremely overbought, that is the top of a bubble forming. And again, even then, it's really hard to call the top. Very, very difficult. So the question is, are we in a long-term bubble in the stock market? Honestly, probably. But that doesn't mean that it can't have 2, 3, 4 more years to go. Now, again, I'm not, that's longer term. Longer term, I'm still bullish the market. Shorter term, I actually think that the market has more headwind than we're giving it credit. I think that rate cuts, yes, rate cuts will be a positive in some ways, borrowing costs coming down, but there's also the concern that maybe it's coinciding with weakness in the markets or weakness in the underlying economy. And so softness in the economy could hurt, the state of consumers, and you might get a pullback. Again, if that market pulled back enough, to me, it would justify another buying the dip opportunity. Does that make sense? I think short term, I'm feeling more conservative about the market. I think that there is potential pullbacks forming. I think, it's a little expensive at these levels relative to the potential reward. And I think that the risk is to the upside. What I mean by that is I think there's more risk in trying to chase longs here than to stay cash heavy and wait for dips. Now, again, if you're cash heavy like me and the market rips through the highs, then yeah, it doesn't feel great because you're like, well, I'm sitting on the side. But if you do get a pullback, which could be sharp and quick, and you have cash on the sidelines, you have dry powder and the ability to take advantage of those dips, right? So that is my thought process. Again, I'm very bullish on the metals, holding longs, trailing stops, looking for pullbacks on gold to add. But I am long silver, which is the predominant trade I've been in the last few weeks. Or not even full. I don't even know if it's been a full week. Has it been a full week since I entered the trade? Yeah, it's been 7 days. 7, almost 8 days since I initially took the trade on this. Indices tend to fall off in September anyways, but they'll be back on strong come on October. Yeah, I mean, let's look, right? So we've got monthly seasonality. That's what we do here. We got the data in front of us. Why not use it? Let's talk a little bit about the S&P 500's seasonality. Last 10-year average, September, has been a negative month. So far, we're seeing a little softness in September. I would not be surprised if that kind of plays out in September, and even October is, in the last 10 years, around a flat performance. Then you get the end of year rally. That's not guaranteed, by the way, but that is most of the time what we've seen in the last 10 years. You've seen a rally into the end of year. A lot of times that's hedge funds who have lagged the performance of the market buying in just to show face to their investors. That's a lot of times what we see there. I also read that buybacks from companies, which make up a huge component of the S&P 500's kind of growth, slow for whatever reason in September. That's one of the speculations as to why September is, but it doesn't even matter whatever the reason for is, right? We just trade data here. September is historically a softer period of time for the stock market. And so again, I think that we have room for September and maybe even October to be a softer period in markets. From there though, and I'm hoping that we get this, I'm hoping that we get a corrective pullback in the markets, at which point I think I could buy some stocks and buy some indices for trades to the long side into the end of year. That's the strategy, right? Nothing too complicated there. I think you have macro that's a little ugly, soft jobs, high inflation. Yes, Fed's going to cut rates, but are they cutting it because it's all good and the coast is clear? Or are they cutting rates because they see some worries? So my opinion is I'm staying long the metals. I'm staying cash heavy on stocks and indices. And on currencies, right, I'm bearish on the dollar. That's pretty much the layout for me right now in a nutshell. Trailing stops on metals. That's from an active, trading actions thing that I'm doing. I'm just trailing stops, managing winners on the metals market that is running hot here. By the way, seasonality is another tool within the EdgeFinder. You can track anything you want within here. So we have seasonality on the S&P 500, currency pairs, commodities, indices, metals, etc. So again, that comes as part of the package within the EdgeFinder's toolbox. I mentioned it earlier, but don't miss it. The 45% off discount available for live stream viewers. That link is in the chat right now. Get access to the tool. It's one-time payment, not a monthly subscription. You just pay once and then you get access to the tool. Speaking of the tool, another thing I wanted to show you guys was look at the Bitcoin to gold ratio. Bitcoin to gold ratio, to me, is a way of looking at risk on, risk off sentiment. When people are feeling more confident in markets, they typically love to buy Bitcoin, right? When people are feeling a little bit more conservative or worried about the markets, they typically buy a little bit more gold. And so this run up that we've seen in metals, you can see has really kicked off a little bit of a risk off appetite in markets. We see people buying less Bitcoin relative to gold. Gold is roaring higher here. And this signals to me that you may have a little bit more pain trade to go, right? So yeah, seasonality tool is awesome. Thanks, Lee. Yeah, and I know you love this one. That's why I pulled it up. Bitcoin to gold ratio is a really popular tool. I love looking at this. It's so simple, but what I found is the simple stuff is the best stuff. Like the put to call ratio, very simple, but so powerful. When everybody's buying calls, I get a little cautious. When everybody's buying puts, I get a little bit more bullish, right? NASDAQ here, pretty flat to the open, coming in just in next few minutes. By the way, guys, we are posting also a whole bunch of stuff on the Telegram channel. We've been posting all sorts of markups. If you like charts like this, if you like, the idea of the put to call ratio, the Bitcoin to gold ratio, if you like having these things put in front of you and you can't necessarily make it to every single stream, it may be worth joining our free Telegram channel, which I've just linked in the chat here. If you'd like to join us, there it is. We post up charts like this all the time to keep you informed on what's going on in markets. So take advantage of that. Link is in the chat if you want to join there. So very good stuff. Also, I'm thinking about trying to live stream this into our Telegram channel at some point. We've got 573 people here watching between all of the different places that we are streaming, which is awesome. I think it'd be cool to add it into our Telegram channel, which has another 40,000 people in it. So we have put together, like we pay for some cool stuff. Like we pay for people to help continuously put content in here to help people stay up to date with what's going on in markets. So it is a free to use service that we are paying to have high quality content being posted up in there all the time. So check it out. It's free to join. So we'll see. I'll post a video later on today with updated thoughts on things that I'm looking for, trades that I'm in, or trades that I'm looking to enter. For now, we've run out of time. I've got our next show host coming in here in just a second. We've got Trader Tom from Simply Forex, who's going to be taking over the stream here in just a moment. Let me just do a quick transition here for us. And then just after this, we will get Trader Tom. Stay tuned right after this. Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Good afternoon, traders, or good morning, good evening, wherever you are. Trader Tom here from Simply Forex, and I'm with you for the next 30 minutes, guys. So if you've got any questions or you've got anything you want me to analyze, then please leave a question and I will go through it. Let's start by looking at a trade that I am in, because euro pound, right? And I like this trade, and it's at a really nice level now for some of you guys that trade Forex. But also I take a look at indices, commodities. So yeah, we can look at whatever you like. But euro pound, I'm going to explain the reasons why I like this trade. And, you know, I'm a purely technical trader, and what I'm about to show you are the reasons why I technically like this trade. Okay. So euro pound, right? On the day chart, I always start with the day chart, and this gives me my direction. So as you can see, if we just follow structure and trend, right, we're in an uptrend. Okay. There's no ambiguity there, right? It is in an uptrend. We are getting higher lows, and we broke these highs in here, so we're now getting higher highs. We are clearly in an uptrend. Okay. Now, I also look at candles, right? Yesterday's candle is a little bearish. Well, not a little bearish, it's bearish. I actually got into this trade yesterday because of this candle on Monday. So yeah, I'm in this trade, but we're in an uptrend. We're at a really nice support level. Okay. And we'll look at this further on the H4. It's such a nice level right now. And we've got loads of room to move into, right? I'm just looking to take price here, but we could take price all the way back up to this resistance level up here. If I zoom out, you can see why that is a resistance level. And then basically, guys, once the daily tells me I can buy or sell, then I look at the weekly to see if it supports my idea. And you can clearly see right here that the weekly supports my idea. Okay, so we are in a weekly uptrend, right? Price has retraced to this support level. And then if I zoom in, guys, you can clearly see all of these candles. These are bullish candles, right? Bouncing off of this level. Bullish candle, bullish wick, room to move into. Okay, so lots of reasons to like euro pound buys. Now, daily, weekly, they tell me that I can buy this pair, but then we need to find an entry. So it's one thing, you know, having a direction for a currency pair. It's another thing finding an entry, right? Finding an entry is the difficult part. You know, anyone can say, oh, I'm bullish euro pound, or I'm bearish, you know, New Zealand dollar, Canadian dollar. But entries, right? They're the tricky part. Now, I've actually been building this trade. So you can see that level that broke, and we are in this H4 uptrend. Okay, and we've got this trend line. Now, I've started entering this trade from here, and I've actually added to the position in here. But those of you that aren't in this trade, if we get a nice big bullish candle, right, that bounces off of this trend line and this horizontal support level, then I think we've got a nice trade on our hands anyway. But, you know, that confirms that this is a nice trade, right? That bullish reaction tells us buyers are in control. Yeah, we've got a nice trade. So I really like this level right now for euro pound buys. And I'm already in this trade. So I just wanted to share that with you guys to show you, what I look at when it comes to trading technicals on a chart. There's a couple of US dollar pairs I'm looking at as well. So US dollar Swiss franc. I'm looking for some structure breakdowns though, guys. So this is quite a typical setup that I'm looking at on US dollar pairs right now. I like US dollar Swiss franc sells. I like Euro US dollar buys. I like US dollar Canadian dollar sells. I'm seeing US dollar weakness, but there is a big but. And let me explain what that but is. So US dollar Swiss franc, you can see that we are in a downtrend, right? We're getting lower highs. And when these lows broke in here, we started to get lower lows, right? We're in a downtrend. And we have had a nice bearish candle, right? I know it's a green candle, but that top wick is bearish. Okay, so can we potentially take price back down to here? Potentially, yes, right? Now, daily is telling me I can sell. Again, I do the same process for all of my trades. Okay, so if we go to the weekly now, does the weekly chart support my daily sell view? Quite a mouthful. And as you can see, guys, this too, right? There was a bit of support here, and then we broke it, and we're in a downtrend, right? Lower highs. Broke these lows, we've had lower lows. And then look at these candles, right? They're bearish candles. So yes, this supports my sell trade idea. So let's drop down to the H4 because this is typically my entry time frame. And you can see my alarm in here, right? My alarm is clearly in here. Why is that? Because I'm looking for daily trend and H4 trend to marry up, right? A nice, happily married couple. Can't say that about many people because we're in an uptrend, right? This is where we're at, clearly in an uptrend, higher highs, higher lows. But if we get a breakdown of this level and we get a H4 structure break, I will be looking to sell US dollar Swiss franc. But only if this happens, right? I need H4 structure to break down. And it is the same with a lot of the US dollar pairs that I'm looking at that I mentioned earlier. So yeah, there are things that I'm looking at, guys, but let's answer a few of your questions. Okay, so OT here is saying US dollar CAD is a risky sell, right? So let's take a look at it technically, right? Now, obviously, if you're looking at Canadian dollar trades, you do need to look at oil as well and see what that is doing. But let's just do US dollar CAD, okay? So what am I seeing? So you can see here that we were in this uptrend, right? There were some levels in here as well, right? It was in this uptrend and then bang, we're in a downtrend, right? We're getting lower highs, lower lows. Okay, and now price has retraced to this nice area of what was once support becomes good resistance. But, that's not enough to enter the trade. If we go down to the H4, you can clearly see we are not with H4 structure. I am not going to just trade this level with a nice big bearish candle, right? I'm not. I need to see structure break down. There's no bigger and better indicator than structure breaking down, right? And that's exactly what I need to see with US dollar, Canadian dollar. So as you can see here, right, US dollar, Canadian dollar is in this H4 uptrend. But again, if we see something like this and we get a break of these lows, I will look to sell US dollar, Canadian dollar just back down to these lows, right? Perhaps leave some profit to run. So that's what I'm waiting for. And then, so OT said it's risky. right? But it's not risky for me once we get all that structure broken down, right? We're in a daily downtrend, H4 structure breakdown. The trade becomes less and less risky, right? If I started selling US dollar, Canadian dollar right now, yes, very risky trade, right? But if we get that H4 breakdown as well, then we've got a good trade on our hands. Maybe we don't. If price keeps just going up with H4 and we don't get that breakdown and we break through this daily resistance level, then I'm not interested anyway, right? So yeah, there you go. US dollar, Canadian dollar. Okay, what else are we looking at here? So Slugmeister, who is a cricket player, I believe. Okay, risky due to CAD weakness. Yeah, I hear you. Let's have a quick look at oil, guys, actually. Right, yeah, oil's dropping like a stone at the moment. It's because we're at a really nice weekly level. So yeah, with regards to oil, because as you know, guys, you know, Canadian dollar and oil are highly correlated. You know, if oil is doing this, then Canadian dollar tends to be weak as well. But again, guys, I won't take any trade until I see those structure breakdowns anyway. And as we know with oil, it can do what the hell it likes. I mean, just look at this, right? Very volatile at the moment due to all the macroeconomic things going on. Right, what else are we looking at? So Slugmeister wants to look at Aussie dollar, Japanese yen. Now, I know Aussie dollar, Japanese yen is at a key resistance level, right? So let's do a top-down approach, guys, and let's break this trade down, right? So let's just look at the facts on the chart. Right, this is not me. I don't have any preconceptions of Aussie dollar yen. I just trade what is in front of me. And as you can see, guys, right, we are in an uptrend. Right, no two ways about it. We're getting higher lows, right, and we're getting higher highs. We are firmly in a weekly uptrend. The problem with it is when we're in an uptrend and we find ourselves at a resistance level. My God, that is the worst line I've ever drawn. Excuse me, guys, I've been drinking. If we find ourselves at resistance like this, I'm just not interested, right? I don't want to buy into resistance and I don't want to sell into support, right? So that's the problem with Aussie dollar, Japanese yen. But let's take a look at the day chart. So clearly, right, things are very bullish. Now we were breaking down, right? Aussie dollar yen was breaking down on the daily, but on the weekly it was still happily in an uptrend, right? And that just goes to show that looking at the higher time frames is so important, and also doing multiple time frame analysis is so important, right? And then bang, super bullish. We even break these highs here, which is technically the last high. So we're in an uptrend. There's no two ways about it. But do you want to buy into this level? And the answer's no, right? And, you know, I want to trade with trend. So if we find ourselves in that situation, right, if we're in a daily uptrend, okay, but we're at a key resistance level, I know I'm not going to have a trade for some time, right? And again, if we're in a daily downtrend, I want to sell the market. But if we're at a key support level, I can't, right? So again, I know I won't have a trade with that particular asset or currency pair, whatever you trade. Yeah, I just won't have a trade, you know, but you've got many other assets to look at. So Aussie dollar yen is a no trade for me. I mean, you know, if you wanted to trade levels aggressively, right? So once price gets to a key resistance level like this has, you know, then you could, when I say trade aggressively, I mean drop time frames, right? So for me, you couldn't trade any more aggressively than scalping the 1 minute chart, right? You know, but that will give you gray hair and you will age, right, very badly. I tried scalping the 5 minute chart. That's as low as I went in my trading career. And, you know, that's how every trader starts off. They think they trade the lower time frames, they can get more trades, they can make more money. After about a year of doing that and getting nowhere, you will levitate to the higher time frames, right? And as I said, guys, I use daily, weekly for direction and H4 for entries, right? And that's a nice happy medium for me. I generally get about 1 trade a day on average. Okay, so you need to find what's right for you. Yeah, maybe you do need more setups. Maybe you are inclined to drop to the lower time frames. But please bear in mind, the lower you go, the less reliable the time frame. Right? So bearing that all in mind, you could trade this aggressively because it's at such a nice level, right? If we got a H4 structure break. And we just don't have one at the moment, right? If potentially, you know, you can see we're strongly trending. If we got something that looked like this, right? Price came up, tested it again, and then we got a breakdown, right? Then okay, you could start trading between levels. You could come from here back down to this level in here, right? So yeah, many ways to skin a cat. Don't skin cats. A better analogy is there's many ways to cook an egg. Yeah. Right, what else are we looking at? What else? Med wants to look at US dollar, Japanese yen. Thoughts, please. No problem, Med. Let's have a look at US dollar yen. Now, US dollar yen is just trapped in a range. Okay, so let's look at that. Where are we? US dollar yen. So again, come out, look at the bigger picture because we want to trade with the bigger picture. So start with the daily chart, right? And you can clearly see we are in a range, right? Because there's no wonder, right? There's been lots of, US dollar direction has not been clear for some time, right? We're all aware of that. And yen has been a bit indifferent as well because the indices 1 minute are risk on, then risk off, risk on, risk off. And the yen has been volatile in that respect as well. So it's no surprise that US dollar yen finds itself in a range, right? Nobody's winning, right? There's just basically in this area of consolidation, you've got buyers, sellers, buyers, sellers, buyers. And currently, no one has won the battle. The only time I'm going to be interested in US dollar yen is if we get a break either side, right? If we get a break out of here, right, there's a strong possibility that we can take price back up to these highs. Okay, but I will wait for that. If we get a break of these lows, there's a strong probability that price will make its way back down to the next key support level in here, right? So US dollar yen, that's what I'm waiting for. Now, it's quite a reliable range. You can trade the range, but I'm interested in strongly trending markets. That's how I trade, right? I want strongly trending markets that are clearly trending. And this is just caught in a range. So that's what I would wait for. But obviously, this range is reliable. You can trade from the top of the range back to the lows, from the bottom of the range back to the highs. Let's have a look at the weekly. Now, looking at the weekly and these candles, right, you can see, let's put this level in, right, because you can see there's a level through here, right? Price keeps reacting at this level. Reacted here, 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 and it's reacting here again. Okay, and it's quite a big level. Now, you know, looking at the candles, again, I'm going to stay out of US dollar yen until one of those things happen. But looking at these candles, right, they're relatively bearish. The top wicks are bigger than the bottom wick. So this is leaning me towards selling, right? But the big catalyst for any yen strength will be a drop in the indices, right? If we start seeing that, you know, we had some bad employment figures come out of the US today. You know, will that lead to a interest rate cut? You know, yeah, it's all about the indices. If they start dropping, we will see yen strength. So there you go. I hope that helps. Who was that? Med. Hope that helps, Med. Right, guys, any other questions you're looking at? Sorry, any other pairs you're looking at or want me to take a look at, guys, please leave a comment. Okay, what else are we looking at here? I'm just going through. Okay, so lots of people wanting to look at pound US dollar, euro US dollar. Okay, let's have a look at pound US dollar. And Ryan, Iloca's treating you well? Ryan, it did. It was. I'm back in Dubai now. I'm back in the sandpit. But yeah, I love the Philippines. It was wonderful. And then I come back to Dubai, which is basically crazily hot and slightly polluted. Right, what else are we looking at, guys? Right, pound US dollar. Let's take a look at that. Now, pound US dollar is a really scruffy technical pair. Right, now, again, let's break this down. Let's do a top-down approach. Before we do, let me drink some neat vodka. Only joking, it's water. Okay, so weekly chart, right? We were in an uptrend, bang, we're in a downtrend. Right, we are in a downtrend on pound US dollar, which suggests selling, but do you want to sell any of those candles? The answer is no. Right, so straight away contradiction. We're in a downtrend, but we have bullish candles. That generally keeps me away from a currency pair or any asset, right? But let's get more information. Let's go down to the day chart now. And you know we saw that pound weakness a couple of days ago, right? But again, just look how scruffy that is. I'm pausing because it's scruffy. Now let's just highlight the key levels, right? Let's just highlight some key levels. Right, and we're just going to join these up. Right. Okay, so if I join these up, this just goes to show, I mean, it's even that, right? It's just scruffy, right? We haven't got no clear trend, no clear direction. These highs are holding. This support level is holding. You know, would you say that's in an uptrend, a downtrend? It's just horrible. Yeah, and you know, if I'm going to take a trade, I don't want horrible price action, right? I want the market to say, hello, Tom, this is a wonderfully trending bullish market. Please buy me. And I say, okay, market, I will. You know, I don't want scruffy crap like what this is. It's just scruffy crap. Now, again, right, if price starts doing something like this, right, and we get a clear break, I'm interested, right? Price retraces into here. Yeah, we've got a nice trade to take lower. Or alternatively, if price breaks to the upside, right, and we start getting a nice clear trend, I'm interested. But this in here is just crap. And if you go to any of the big, trader exercise books, look up crap price action, and it will show you pound US dollar at the moment. Yeah, I just don't want to touch that. So yeah, not interested. Euro US dollar, who somebody else was interested in a minute ago, is a little bit tidier, right? Now, if we go to the weekly, right, we're still in this weekly uptrend. Okay, so my point here is as well, if you're looking at pound US dollar and it's scruffy, right, and for example you like US dollar weakness, maybe macroeconomically, fundamentally you like US dollar weakness, but you go to pound US dollar and it's technically crap, then go to a US dollar pair that isn't technically crap, right? Go to a currency pair that's quite clear in direction. And if we look at Euro US dollar, right, we're in an uptrend. That's clear, right? I know we're stuttering a little bit in here, but we are in an uptrend, okay? And we have bullish bottom wicks, bullish candles. And now let's go to the day chart. And we are in an uptrend, right? Stroke range. This is where we find ourselves with Euro US dollar, right? This is where we're at. We're in an uptrend, right? Stroke range. We're ranging between here and here. So if you just piece that all together, weekly is in an uptrend, daily is in an uptrend stroke range, right? So we can trade from the bottom of the range to the top. And again, right, there's no secrets to the way I trade. I share my trades every day, okay? If you go to the H4, I'm just waiting for a H4 structure break. So if we end up getting something like this and we get a break, you can see my alarm is in there all ready to go. But if we break these H4 highs, I will be interested in taking price back to the top of the range. If that doesn't happen, right, and price bounces off this level and comes back down, then no problem, right? I don't have a trade. So yeah, that's what I'm waiting for with Euro US dollar, break of this level. Right, guys, we've got 2 minutes. So let's take one more currency pair very quickly. So Mickey, yes, Swiss franc yen. Let's do this. Right, this is what I do every morning. I look at the day chart. I say to myself, what is the trend? Right. The trend is up, right? Because of that candle breaking this resistance level and these highs, you can clearly see we're getting higher lows, and now we have higher highs. So we are in an uptrend. Then I ask myself, do I want to buy those candles? And the simple answer is no. They are very bearish. So for me, it's a no trade, and that's how quickly it takes me to analyze that currency pair. Now, I know why you like Swiss franc yen, because the H4 is really nice, right? We're at a really nice, what was once resistance becomes support. We're getting all of this buying pressure at this level. I get it, right? I can see why you would want to buy, potentially back up to here, take some profit, potentially let some profit run, but I just can't, because I cannot buy into these candles, right? If I, regardless of structure, trend, support and resistance, everything, if I said to you, if you was like literally just arrived from Mars and I give you a brief lesson in candlestick reading, and I said to you, right, Mr. Alien, what would you do with these candles? He or she would say, sell, right? That's the problem I have with Swiss franc yen buys, although, we're in an uptrend. Guys, if you've enjoyed my little bit of analysis, then please don't forget to join my channel, Simply Forex. I'll see you guys all again soon. Thank you very much for the time, and thanks for having me on, guys. Much appreciated. See you soon.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Okay, what's up, people? Welcome back to the stream. Oh, welcome back to myself, actually. Hope everyone's doing good. As always, we will go through a bunch of markets today. I'll go through any pairs I'm kind of looking at to trade for the rest of the week and going into next week as well. Any trades I'm in, I'll share with you, let you know what I'm looking at, what I'm currently trading. If there's any particular pairs you do want my analysis, let me know. Of course, any time frames as well, let me know. Stick it in the chat and we shall take a look. At the moment, I'm only in one position. Aussie yen longs, haven't hopped into a new trade this week. Price has been going pretty well. We've seen some weakness for the yen, so the trade did really pick up some steam as of late. We have come crashing into some resistance, so I am prepared to potentially walk away and exit this trade. Where this arrow is, this line is where my new stop loss is placed. I have managed to trail my stop loss as price has gone in my favor, especially when we are hitting major resistance. There's no need to potentially, stomach a move like this per se against me when I've already taken advantage of a really nice swing in my favor. Price has hit some major resistance. This could be an area which price does drop from. It could also be an area which price breaks as well, which is why I'm kind of trading stops. So to give myself the opportunity to catch that move, catch that breakout. Because the reason why I hopped into the trade initially is because we do have somewhat of an uptrend on the daily chart. So the plan is, can we perhaps catch the next higher low and perhaps catch the next swing back to highs, which of course price has done, perhaps maybe new highs, maybe price will continue the trend. We do have some resistance to our left here around 98.6. I can see Aussie yen potentially getting there as well. So I'm still giving myself the possibility to capitalize on another swing, but at the same time, if price is going to reject resistance and turn around, I don't want to hang around and overstay my welcome. So stops or trail just underneath that low there. Almost actually stopped me out not too long ago, but it looks like we're seeing some strength now. So that's the only position I'm in. I've been keeping an eye on the dollar, but it's just been very, very flat. I haven't really seen much opportunity, to be honest, with USD, at least in terms of trending structure and trending behavior. Price has been very flat, trapped between resistance, trapped between support. And my analysis with the DXY basically stands with, okay, if price does break resistance, I will be bullish. If price does break support, I'll be bearish. Very, very simple. No need to overcomplicate it. As price is in between the two levels, I'm very much neutral. If I expand to the daily chart, there is some bullish structure which price may be looking to continue. Hence why if we do break to the upside, I'll anticipate this to be the new swing low of the market and possibly a push back to the high as the next target. And likewise, if the price does break to the downside, that shows that, okay, maybe this bullish structure isn't going to continue. And we probably are going to see the continuation of the larger bearish structure at play, which will probably take us back to lows. So USD, I have been fairly neutral on as of now. And a lot of USD pairs are showing similar signs. Take a look at Euro, pretty much a copy and paste of that analysis there with the DXY, equal highs, equal lows. Price has been very, very flat. So if you are looking for opportunities on Euro, my advice would be just look to position yourself high within the range or low within the range and just be looking to try and catch the highs and lows. As price comes back to support, looking to pick it back up again. Of course, as price comes to resistance, looking to sell it. What I would suggest to stay away from would be opportunities inside the middle of the range, because that's where the most noise is, the most indecision, and just quite frankly, you won't have very sensible places to put stop loss, even find entries really, because of all the chaos inside the middle of the range. So I would very much want to stay away from euro whilst we're in the middle. So any kind of like lower time frame opportunities you could spot within here. I'm not to say that they won't play out. Trading is all about probabilities. Some bad trades do win and some good trades do fail, but the principle is inside the middle of the range where the most noise is going to be. So by default, you kind of want to be away from that, and of course, just buying the lows, selling the highs, as long as we can see healthy rejection at those areas, of course, are going to be sensible trades. They're not always going to play out, but by default, you do position yourself well to take advantage of swings within the range. So with euro, if you are looking to trade it, I would focus around 1.159 or sells around 1.17. And those would be the areas which I'll be looking to short from. In the middle, I would stay away. Same logic applies with the DXY. And pound USD is not any different as well. This one's been really flat. It has rejected some very nice support, and there has been some nice opportunities to pick some lows there. And we've tested resistance really well. But all in all, pound USD relatively flat as well. So I'm looking for opportunities on the breakout. Lows here look really good. Highs here look really good. If price does eventually decide to break to the upside, that's where I target, and in a similar fashion to the lows there as well. So just being patient, waiting for price to make its move. USD hasn't really provided much the past almost a month now, to be honest. Been kind of just waiting for price to eventually see some momentum. Hopefully with NFP tomorrow, that can change. But as of now, difficult to find any kind of trend following opportunities apart from the range plays we've just spoken about. What's up, Lee? What's up, Yusuf? Hope you guys are doing good. So in terms of my watch list for the rest of the week and the upcoming week, I'm keeping an eye on USD, waiting for the breakouts, and hopefully NFP will do that. So I'm keeping an eye for NFP for that tomorrow. In terms of some of the minor crosses, I do like New Zealand CAD shorts. I've kept an eye on this one. I actually did take a trade on New Zealand CAD earlier in the week. Or was it last week? Yeah, last week. It all looks the same. But yeah, I did take a trade last week. I got in here looking for momentum to continue. We had a nice counter trend line break here. So I did hop into a sell. But momentum never continued, so I exited the trade pretty quickly around here. My original stop loss was above the highs, but I managed to close the trade earlier with minimal loss on that position because momentum just wasn't picking up. In hindsight, price still wouldn't have hit the stop loss, but quite frankly, I wouldn't want to be in the trade anyway because the whole idea with the trade is that I was looking for the continuation of that momentum earlier within the month, and we just weren't seeing that. And of course, as we can see in hindsight, we've just been consolidating. So that momentum I was looking to continue just didn't continue, or hasn't continued yet. But nonetheless, I'm still pretty bearish. Looking at the higher time frames, I'm liking the structure here, lower lows and lower highs. I do expect us to continue lower. I've got some targets around 0.79 to aim for, and also 0.786, and that's why I do see price eventually ending up. Let me drop that back there in there again. So that's why I'm seeing price eventually ending up. So in terms of opportunities, because we are quite flat right now, I am looking at a pullback into this supply zone. Really nice consolidation. Price has been really flat here. Of course, really nice push to the downside. A lot of aggressive selling pressure. So if price was to return there, there's a good chance we do see sellers enter the market and perhaps a bearish reaction and maybe another lower high in this bearish structure. And we hopefully continue back to lows and potentially my targets around those areas. So I quite like New Zealand CAD shorts, no longer from this level anymore. Just because of the lack of momentum and the fact that we're starting to consolidate, find support, doesn't really give me much confidence to keep looking to short there. But a slightly bigger pullback, maybe to take out some of these highs where we had some earlier some early sellers in the market, potentially take them out, and then we could see the continuation. I quite like that as an opportunity there for New Zealand CAD. As long as price doesn't take up this high, I stay bearish. If we do, that would put me off the idea of shorting New Zealand CAD. So I do like New Zealand CAD. In terms of the yen pairs, I'm keeping an eye on dollar yen to see how we continue within this consolidation, because we have been very, very flat, and I do think there will eventually be a big breakout. As to which direction, I'm just going to wait and see. I did quite like the longs coming into the week. We do have somewhat of a ascending channel, but I did want to see a push a lot lower down. Nice brief area of demand. You can see a brief pause there for a day and a pretty aggressive reaction to the upside. So the plan is, can we get a pullback into that level and hopefully a continuation? But of course, that hasn't quite happened this week. At the moment, we're just testing the high of the range, and as long as price stays within that, there could actually be some nice selling opportunities to take it back into the low. And similar to our discussion with Euro USD, that's the best way to trade it, looking to sell high within resistance, within a range, and of course looking to buy low when price does hit support, again within a range. No need to overcomplicate it more than that. If you are looking for trending opportunities, simply you want to wait for price to break out. If price can see a confident breakout, then trending opportunities, whether on breakouts or pullbacks, then they come into light, and those opportunities naturally will be a lot more high probability once the breakout has happened. But for now, that's not the case, and of course we could still very much break out lower. But yeah, dollar yen, not much to say apart from the continuation of the range. There could actually be some more shorts potentially in the next few hours if we come back to test the high again, reject well. Possibly that could be a nice double top before a short. I would say keep an eye if you are looking to trade dollar yen, because we do have NFP coming out on Friday. So if you are going to be holding a trade into that, be prepared to either hold through the news or potentially exit before. So keep an eye on that. Excuse me. Data release in 3 minutes. Yes. I'm not expecting too much, to be honest. I mean, I'm not really trading any USD pairs at the moment, but I'm not expecting too much movement here. My main focus is NFP tomorrow, but we'll see what type of reaction we see. Of course, we've got some CAD news as well, CAD PMI. But in terms of USD itself, we're not really trading at any area which I'll get excited about. So with this news release now, we might see a bit of fluctuation, but I wouldn't be prepared to do anything with it. It would be nice if price was trading at resistance or support. That could give us kind of an extra dynamic to that trade. Potentially, let's say if price was at resistance and the news spiked us higher, then we came straight back down. That could be a nice confluence to back up a trade, potentially taking out some early traders to perhaps see the bigger move. As of now, the way I see it, price is in the middle of a range. So even with this news announcement, of course, we'll see what happens. But even if we do see momentum up or down, that doesn't really change much in terms of my view on the DXY. If, of course, it does translate to eventually a breakout, then sure. I feel like that will be probably saved towards Friday a little bit more. But yeah, USD pairs have been pretty flat. I have been keeping a close eye on dollar CAD as well. This one should be interesting. Got USD and CAD news. But with dollar CAD, we have approached a nice area of supply, which potentially could give us a nice continuation back to lows. I've actually kept an eye on dollar CAD throughout the week. It's a pair which is on my watch list and a pair which I am looking to trade. But I want to see more rejection, more signs that price is about to shift bearish. We do have somewhat of this counter trend line which is still in play. Depending on how we react, maybe a strong break of that counter trend line could tempt me into a position. But what I will say with dollar CAD is that we have formed this kind of rounded bottom, which is more so of a reversal pattern rather than a pullback chart pattern, because my plan with dollar CAD has been basically looking to continue this momentum to lows and so on and so forth. But yeah, the way price has had that pullback, doesn't give me much confidence. So if I could see maybe price consolidate well and give me a strong close, that would give me a bit more confidence for an entry. Stops above the high, targeting the low here. So if I can see if things develop well, that will give me a bit more of a reason to short it. I like where we're trading. I like the fact that we're firing some wicks, but I still need a bit more before finding some entries. But this is essentially a move which I'm looking to trade probably this week, going into next week as well. Thoughts on gold on the 15. Is it ready for a short? Okay, let's take a look. So, of course, gold has been very bullish. Yeah, gold's been very bullish, but potentially we could still see some more room for a pullback. I'm still liking this area for a buy for gold. I still think gold still has a lot of room to the upside, and I'm still seeing really clear momentum. Of course, we had a bit of a sell there, which isn't anything crazy. Of course, within this uptrend, there will naturally be some bearish moves. You're not going to expect price just to completely explode and not see much downside. You are going to get bearish candles and maybe some big ones as well. I wouldn't say this one is too alarming, especially with the wick we've left to the downside. So I would say momentum is still clearly with the buys of this one. Of course, we just created new all-time highs recently. But perhaps there is still room for another push lower before we do continue. And that's really what I'm looking for gold, because this is my area of interest. Had a brief consolidation, really strong push to the upside. So really showing us that from this zone in particular, there was quite clear strength within the buys there and a lot of momentum from this area. So if price was to come back and retest it, there's a good chance we could see more buyers enter the market and perhaps a higher low form for this trend. So that's what I'm interested in personally. But in the meantime, there could be some selling opportunities. We spoke about this earlier on my stream. And yeah, price has come back to a very nice area of supply. I really like that wick, I must admit. I really do like that wick. Nice piercing wick into that supply zone. Again, shorts on gold are aggressive in this condition because, as we spoke about, high time frames are still very bullish. Monthly, weekly, daily, 4 hour, all of those major time frames that are pointing up. So be cautious when you are shorting. I think a good tip or a good a suggestion to keep in mind is be quite active when managing this trade, because gold at any point could just see some strength from the buyers and price could be looking to rip to the upside, in no time. The thing about gold is we could be doing a lot of nothing for a while and then come back and check the market and we've flown, and we're seeing some really aggressive momentum. So if you're looking to short gold, I do like it because initially really strong move to the downside, taking out some structure to the left there. So the shorts do make sense. In terms of actually shorting this, perhaps maybe wait for a break of the counter trend line, or maybe perhaps a double top, something like that, just to really kind of back that supply zone is holding. Right now we are seeing some strength. This candle still has 11 minutes before it does close. I mean, we can come back and check to see how it does close in 11 minutes time. But to me, it looks like we're still kind of corrective for now and still obeying that trend line, which of course could still see us continue back to highs. I do like the idea of another sell. I think, I still think that's the likely move, but I would still say it's a bit too early to short now. I would wait at least for that candle to close to see how it does represent. Is there a bit of a wick to the downside? Does it close with momentum? Those are the questions I'll be asking myself with gold. But yeah, I'm not seeing quite any evidence yet for a short. I think it's still a little bit too early, but we are trading at a nice location. But I would wait for price to close, for the candle to close. 35.53. Where is that? 35.53. Okay, so that's the supply zone you're looking to short from. Yeah. So yeah, I do agree. It's a nice place for a short, but I would wait for that candle to close to really to confirm my bias. Because if we just close like this, I could easily expect the next candle to push back up again. So it's still too early to say. What should be target for gold upwards? Good question. I mean, gold at all-time highs, where do you target for gold? How far do you hold the trade? Do you take it at the highs or do you hold past that? I think you've got to take gold for what it is. It's an extremely bullish market, which could rip to the upside and still see multiple bullish days. I mean, a good indicator of that is the previous trend we've seen. Of course, it does have its pullbacks, but when we are at all-time highs, you don't necessarily know where that pullback will start from. You could look at psychological levels as reference points, so round numbers, 3,600, 3,650. These are areas where maybe you could see some selling pressure kick in, profit taking happen naturally, 3,700. If you look here, our last all-time high over here pretty much happened at 3,500 to the pip. So there is some what's the word? There is some, my mind's gone blank. There is some backing, there is some confidence behind these psychological levels. They're not just a big conspiracy. But would I look to take profit at them? Probably not, because I don't know how far price could go. And I definitely would kick myself if price does have a massive rally and I get out just because price hit a round number. I think those are areas where maybe you could take some partials off or maybe trail stops tighter. But I would try and take advantage of the opportunity as much as possible. Right now, we're really in a really aggressive trend. And aggressive trends don't always come around every so often. So if you do find yourself in a nice buy and price starts rallying well, just really try and maximize that as much as possible. And the best way I know how to do that is trading stops behind price. Of course, when we do get back to highs, that will naturally be a target. We could find resistance and come back down, so I'd watch out for that. That could be an area to, again, lock in partials or just stay aware of. And likewise with the psychological levels as we continue through them. But I don't really have a target for gold. I think the next big one is 4K, but that's still very, very far away. So probably not going to speak too much on that. Okay, yeah, that's a good bet. Stay away from gold until NFP. Probably wise as well, unless you're going to close the trade before NFP. I think that could be a smart move because, of course, you're going to see that natural fluctuation, injection of momentum, and you could get caught on the wrong side of it. And gold does not mess around with news as well, especially like NFP. So if you are going to jump into any gold trades, probably looking to get out before NFP. Or, of course, if you've been in for a while, you can probably still stomach the news release and hold through. That's a good rule. That's a good rule, LFTJ. If you only look to buy gold, and if you look to sell it short term. I mean, again, people sometimes forget to trade what the market is actually doing, because a lot of people kind of get lost in the sauce in terms of finding really good sell opportunities, buy opportunities. You forget, at the end of the day, you're trading the market, and what is gold doing? Well, at least for the past 2 years, pretty much, it's been in a very, very strong uptrend. Of course, we've been consolidating for the past few months. But that was its own phase. We've been trending really aggressively. We came into a consolidation. It looks like, at least as of now, that trend is continuing and is back alive again. So if you're going to look for selling opportunities, it doesn't really matter how good the sell opportunity looks. It doesn't matter if you've got 500 confluences. This is a very strong uptrend. And if that uptrend is going to continue, those confluences go out the window and price will continue. So you don't want to get lost in the analysis, lost in the kind of micro moves of the market. Trade what's in front of you. This is a really aggressive market. So yeah, looking for buying opportunity will be your best bet. Same for a lot of the indices. Naturally, they'll of course have that tendency to go higher. So if you are going to shorting for the short term makes the most sense. Being in and out of the market makes the most sense. You're not there to hold and try and predict tops because probability is not in your favor. So yeah, I highly agree with that statement. You got to make sure you're trading what's in front of you. No problem, Yusuf. Happy to help. Nice, congrats. No problem, Inkita. Hope I'm saying that correctly. JPY pairs, JPY pairs. I've been keeping an eye on them. I'm currently, I was currently short. I'm currently long on Aussie yen. I just forgot which pair I was buying for a second. So yeah, I'm currently long on Aussie yen. I've been pretty bearish on the yen itself, so expecting more weakness for the yen. And that has been the case. Price has been falling. It hasn't been the cleanest or... Well, yeah, it hasn't been the cleanest of trends, but we have been steadily moving down. We are in a bit of a consolidation at the moment. Price has become quite flat and stuck, so I'm unsure about the next potential big move for the yen. I could see this potentially being a bit of a bottom and price turning around. I could see this as a kind of a similar situation to what we have with gold. A long trend, price becomes stuck in a bit of a consolidation, eventually breaks out and sees the continuation of that. I can see price doing that as well. So it's 50-50 in terms of the next big move. So I am kind of just waiting on the sidelines for the yens to clear up. Currently long on Aussie yen right now, and I'm just trading stops just to see how far we can take that trade, really. I'm being a bit more aggressive with stops now because we have come into resistance. I don't want to overstay my welcome. If price does want to respect this level and come back down against me, I'll stop out, move on to the next position. If we do want to go and potentially break out, great. I'll stay in the trade for as much as I can hold with the stop loss, and we'll go from there. In terms of opportunities now for Aussie yen, I mean, possibly there could be some sells back at resistance, but you would want price to get there again and reject it again. I'm not too sure if I'll be keen on the sells, naturally, because we do have this uptrend at play, which is the main reason of why I'm buying, because I was looking to try and find the continuation of this trend. Of course, doesn't mean it will continue. Maybe price does respond to the highs well and we do reverse. That could be it. But if you are going to short from the highs, understand that momentum isn't necessarily in your favor. So don't try to be too stubborn with the position. If price reacts well, great. If it's not reacting well, momentum starting to show for the buys, potentially look to exit that trade quickly. We might be on for a breakout. But if you are looking to trade Aussie yen, I'll say maybe some shorts at the high makes sense. New Zealand yen, this one is interesting because, of course, Aussie yen, we've just seen a nice bullish move. But, I mean, we have seen a nice bullish move with New Zealand yen as well. But they've been in two different phases. New Zealand yen is still within this bearish trend, whereas Aussie yen's kind of breaking out higher. And they're normally very similar, but they're on different paths at the moment. But anyway, as for New Zealand yen, we are testing a very nice area of supply, and it looks to me we're testing a nice trend line. This could be a really nice place for a short. This could be a very nice place for a short. So if I had to compare Aussie yen and New Zealand yen, which one would I rather short? 9 times out of 10 is going to be New Zealand yen, because number one, I've already got some bearish backing in terms of I've already seen some really strong momentum in my favor. I've got structure in my favor as well. Price is coming to a nice area of supply, trendline confluence there too. And I really like the way price pulled back because it's overly quite corrective, which gives me the impression that potentially price could be looking to continue lower. If price was going to reverse, I'll expect more strength, more bullish momentum, kind of like what Aussie yen did. But we're not seeing that with New Zealand yen. So there's a lot of confluence here backing up some shorts, and potentially we could be seeing another lower high as to what we've seen recently. In terms of entries, I would say that New Zealand yen is quite flat. It looks like there's a lot of support here, providing a lot of these wicks. So I would suggest maybe a strong close in the 4-hour chart like that. That could be a nice entry for New Zealand yen. Entries like this, even a stop above that range, or if you want to give yourself a bit more room above the high makes sense. And then a continuation back to the lows would be my best guess there for New Zealand yen, and maybe further as well. At least within this structure, you do have a bearish trend, which simply looking to try and continue. So yeah, Aussie yen I'm not a big fan of. We are hitting resistance, so yes, naturally there could be some nice shorts off the high, but I would prefer New Zealand yen because there's somewhat of a trend here, and I can see potentially price reacting with that and see some downside. Of course, keep an eye on yen because yen will be the dictator of all the yen pairs. If yen is going to be strong, it's going to be difficult. If yen's going to be weak, it's going to be difficult for us to see some downside. Of course, if yen is strong, that should help you out. So keep an eye on yen. But in terms of an opportunity, I do like that. It needs a bit more conviction in terms of a good entry, but there is potential there. Anyway, guys, we have come up to the end of my segment. I do really appreciate you guys having me on the stream and listening to the analysis. If you have enjoyed it, make sure you like the stream, guys. And of course, check out my channel if you want to see more of my content. But thanks for having me on. Have a great day, and I'll see you guys next week.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. If you have any questions from yesterday that I didn't go through, definitely put it in the chat. Or if you have any requests in general, let me make this window a bit bigger. Let's also open up the EdgeFinder. So what has been happening from yesterday? NASDAQ pretty much flat, gold a little bit negative, but nothing significant. Silver pulling back a bit, euro dollar flat, euro GBP retracing those gains that we had. I still have the same things on my watch list, so nothing has changed significantly. In terms of news, we can take a look, let's say the euro dollar. We can go to the little bubbles and see. So again, we're getting some US data, ISM services PMIs. Let's actually do a bit of a deeper dive into that. So let's go to the news calendar. Here we have the services PMIs came in higher than the forecast. So an actual number greater than the forecast is good for the currency. That's why I love Forex Factor. You get an exact explanation of what the actual number means. So you can see it's a level of a diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So you want to see this number be higher than the forecast. So that's good. In terms of the previous numbers, we had the unemployment claims come out also today. So they came out better than expected. I'm going to be very interested in the NFP print tomorrow. We had non-farm employment change. Okay. We had some JOLTS job openings, which came in lower than expected. And we had ISM manufacturing PMIs, which came in a bit lower than the forecast. But again, now we have the services PMIs, which came in higher than the forecast. So it's all around a similar number. I would say we are pretty close to the forecasted number. What I'm looking at is NFP. So non-farm employment change. That is going to be my main focus for tomorrow, and that is going to be the most important piece of information. Let me also see the Fed Watch tool for now. Let's see. So what do we have for rate cuts? We have 97.6% chance. So it has even gone up. It was around 90 the last time that I checked, but it has gone up to 97.6%. So interesting stuff. Pretty much a rate cut is in the books, or it's priced in. You can see, so after NFP, we have PPI next week, and we have CPI next week on Thursday. So those will be very important as well to see what is inflation doing. And then on the 17th, we do have the Fed meeting, right? So funds rate, projections, statement, press conference. That all happens on the 17th of September. Now that is going to be a very, very important event. So let me check the comment section. Let's see. Okay, so NASDAQ, EU, gold PMIs, all data on US came bad for currency. Only one PMI is good for currency. I mean, yes, it's coming in worse than expected, but it's not like the last NFP print. If you look at the last NFP print, it was, now that was a shocker. So that was a big one. If you go to here, not this one, to here. So the last one was pretty bad. This is a miss. This is a definite miss. 73K, forecast was 106, previous number 14K. Now that's a big, big miss. What is not a really big miss, in my personal opinion? Well, I mean, the jolts were a miss. I would agree, but I would say that the manufacturing PMIs, this is not a big miss. So it is lower than the forecast, but it's not like a drastic amount. It's just a few points, you could say. So how can we see which one is holding the weight? Well, the one that's holding the most weight is going to be NFP. The one that most people are going to be watching at will be NFP. So out of all of those, they can all get negated by NFP. So I would say keep it simple. Focus on the 10 FP number. Once that one comes out, do look at the PPI and the CPI numbers. That is going to be the most impactful, the most important. Hey, Marco, thoughts on Aussie Yen and Aussie USD? Yeah, sure. No worries. So what do we have first? We had the NASDAQ. So the NASDAQ has been pretty flat, has been pretty steady right here. So not really moving anywhere. I'm looking for pullbacks to these levels, to the levels of support, and then I would consider some buy setups. I think right now we are a bit, we are pausing a bit, we are a bit corrective. I would expect more downside. Let's check the EdgeFinder for the NASDAQ. Let's see. Yes. So COTS, looks like the institutions are long. Looks like retail is short. So we're getting a bullish reading right there. That is interesting. Seasonality is bearish. September doesn't tend to be a good month for the stock market. Okay, so September, according to the seasonality, tends to be a bit of a bearish month, which is good to know. What is also good to know is now in 2025, Trump has done so much news, tariffs, announcements, crazy stuff, that all of the seasonality is pretty tough. So pretty tough to anticipate. And seasonality in 25 shouldn't really have a huge impact because all of the other factors influencing the markets. So that is good to know as well. Neutral reading from the EdgeFinder. Looks like I thought the institutions were short. They're actually long. I personally think this is getting a bit exhausted. I think it's kind of slowing down on the top right there. So it's kind of breaking those highs and retracing, breaking the highs, retracing. Selling pressure here and here. So definite difference if you look at this price action compared to, let's say, this, right? That is why I think some more weakness will come. So I think some more weakness will come for the NASDAQ, and I'm going to get in here. So I don't think, even though I'm expecting weakness, I don't think we're going to retrace much. I think we hit these areas. And then if I manage to get in, let's say a bit lower, let's say here, I think that's a pretty good trade. Pretty good reward to risk. You can even target the highs. You can have a tighter stop loss. But if I get in here, I need to have a pretty big stop loss, and I cannot really target the highs for the first take profit. But if you get in lower, then you can have a tighter stop, and you can target those highs. You can have a nice positive reward to risk. So that's why it's always a bit better to get in lower, although sometimes it doesn't pay off, because it doesn't pay off to wait, because for gold and silver, I never got a pullback to my entry. Instead, they just kept on flying away without me. So it's a kind of a two-way street. You need to choose what is the right thing for you. Some traders may want to get in when they see the fundamentals and macro be bullish, and some would prefer to wait for a pullback. Some would prefer to not buy when the price is overextended, like I think it is now on gold and silver. I don't think it's a smart thing to buy here. So I would like to buy here, let's say at this level of support. Tight stop below the 20 MA. Maybe we can get a bounce, and maybe we can go up. That is the game plan. So that's my NASDAQ. Euro dollar. Euro dollar has been really flat. So euro dollar has been really, really flat and corrective here. As you can see, I am in a trade. It hasn't been going anywhere. It's been super slow. So I am thinking about maybe just closing it. But for now, I'm going to let it run. I'm going to let it run through NFP. I'm going to let it run through CPI, PPI, and maybe all the way to the Fed meeting. So I did get taken out with this candle on my personal account, but my Darwinex and my prop firms are still in this trade. This was August. Pretty slow, pretty corrective. Makes sense. A lot of big players, a lot of investors, hedge fund managers, they are on vacation, and only on September are they back on their desks and sort of actively trading. So during the summer, you're going to see that the general momentum is going to quiet down a bit before the eventual wake up. So before the markets eventually do wake up in September, hopefully we get a breakout. I think everyone is also waiting for NFP. That's why you can see a bit of a flatter price action. I really liked a bullish trade on the 13th of August. I really liked it, but lately I changed my mind. So lately I'm more neutral on this currency pair. I'm going to let this trade run, but I don't have a clear bias. Even if you go to the EdgeFinder, I think you're going to get a bullish bias. Yeah, a bullish bias here. But if you go to the heat maps, let's see, you're going to get US heat map. Actually a pretty bearish reading. Okay, so a pretty bearish reading right here. Most of the stuff is coming out bearish. We still have some of the data needs to be updated today, the data that came out today. But for Europe, let's see, Europe is 50-50. So Europe had a pretty bullish reading as far as the numbers that are coming out. Had a bullish reading, now it's more 50-50. So the story is kind of stale. Right? I would say the story is no longer as bullish as it was. Yes, there is an overall uptrend. That is correct. We are in an uptrend. But if I was not in this buy setup, I would personally not be looking for buy setups right now. Gold. Okay. So for gold, as I mentioned, gold, I'm looking for pullbacks. So pullbacks to the level of support. I want to see some bearish price action. I don't want to buy here. We are overextended. So I was pretty bullish all the way through this range, but I was waiting for a breakout. We finally did get a breakout, so that is nice. Now I need a pullback. I did have an order on. It was a buy limit, and it was, I think, around this level right here. Or at this time, let's say, I think it was 2 days ago, and I had a buy limit here at this level of support. So like this. This is what the trade looked like. And then we continued up even more, so I canceled my order. We actually broke out into all-time highs. So the two most interesting assets right now, the two best things that you should focus on as a trend trader is going to be gold and silver. That's my take. Yeah, Aussie and Aussie USD. Let's see. Aussie USD is just flat. Technical analysis is flat on the daily chart. Let's see. So USD is bearish. Aussie actually bullish right now. So getting better data than expected. Let me check. What is the GDP for the Aussie? Let's run through the EdgeFinder. Let me see. So pretty good GDP, rising, no negative GDP. Let's see unemployment. AU Aussie. Steady unemployment. That's pretty good. Inflation. Let's check on the inflation. AUD. Hopefully it's high so that they raise rates. It's coming down lower. It's right around the target inflation rate. Okay, let's check on the RBA interest rate as well. Whoop. Come on. Trading Economics, that's my favorite website, Trading Economics. So it looks like they're on a bit of a path to cut rates. They have been cutting interest rates, which is bearish for the Aussie. So one last thing, top setups. Let's see, AUD USD. Bullish, and the eco just the numbers, just the data. Let's see. USD. Pretty good, pretty bullish. You know what? I would actually be bullish. This is a nice one. I think this is a good currency pair, interesting currency pair. I just need a breakout to the upside. So I would need a breakout out of the range. So let's put an alert here. Let's see if we do break. As it stands, the technical analysis looks super corrective. So as it stands, I'm not interested. If we do break out, and that could happen in the next, let's say, in the next few weeks or maybe even days after NFP. So NFP tomorrow should be pretty volatile. As I mentioned, we have CPI, PPI, and then we have the Fed meeting on the 17th. So maybe all of that can lower the value of the dollar even more, maybe raise the value of the Aussie, and maybe this thing goes up. So I need the technicals to align with the fundamentals. That's why I'm looking for a breakout first. Let's wait out this period. This is a pretty volatile, pretty stormy period that is up and coming. So let's be a bit more patient. If you just look at this on the daily chart, it looks flat. Just looks flat. Not the best thing to trade as a trend trader. Aussie yen. I think I saw some action on the Aussie yen. Yes, so we're pushing higher. Although on this daily chart, let me see the 1 hour. Although on the daily chart, it looks overall flat. So overall flat right here. And let's take a look at the fundamentals. Let's see, AJ, Aussie yen. Let's see. Okay, it's a bullish score. It's a pretty good score. Let me check the yen. Now for the yen, I don't really have a bias. So I think the yen could be a bit dangerous. Buying, selling. So right now it's kind of a bearish impact, but they can raise interest rates. So the Bank of Japan can easily raise interest rates. I don't like this trade as much as I like the Aussie dollar. I think Aussie dollar is better. Aussie yen, I think I would still take a look if we break out of the highs. Let's check out the overall story as well. Okay. But if the Bank of Japan continues raising interest rates, which they can, that could be a problem if you're going to go long Aussie yen. So for anyone looking at the Aussie yen, are you looking for buys or short setups? If you're a short-term trader, maybe you can look to sell into this resistance, right? Although the fundamentals are more bullish than bearish, this could be a trade. Again, I would prefer to get more clarity on the yen, to do some more research on the yen, and then I would have a more clear picture. Right now, I don't like AJ. Aussie dollar is a pretty good one. So on the heat map, US stocks are getting a bearish signal. Yeah, they are. That is correct. That is correct. They're getting a bearish signal, but the rate cut story should be bullish. Rate cuts are bullish for the stock market. Now, I would actually prefer for this to be a bit of a bearish signal. I would actually prefer to see NASDAQ go down a bit. And if it does go lower, I don't think it's going to be significant. I think we sell off maybe let's say 5%. That's pretty good. That's pretty healthy. That's a healthy pullback. That's a healthy sell-off. Pretty strong level of support there. I think it could hold. I'm willing to bet my money on this level holding. So I'm not concerned. I'm not concerned. I actually think the US economy is still pretty strong. Yes, we're getting a bit of weaker data, but I think overall the US economy is doing pretty well, especially with AI, lots of spending on artificial intelligence. It is gonna at least artificially inflate the price of the Nasdaq. So even though it may not pay off in the next 3, 4, 5 years, right now the spending is gonna reflect in the stock price. Okay. Let's see. AJ on EdgeFinder says bullish, but chart is going down. Funny thing is I find that if I go opposite of EdgeFinder, I make more. Well, it's all about the probabilities. In my experience, EdgeFinder really can improve your trading edge. What I like to look at is not just a bullish or bearish signal, but a very bullish or a very bearish signal. So right now, gold is of high interest because you're getting a very bullish reading, and even silver has a high number. So it's all about the probabilities. It's not going to work 100% of the time, and you need to have a big enough sample size. But in, let's say, 6 months or 1 year, if you follow the signals from the EdgeFinder, you will find that they are profitable, right? So it's not going to work 100% of the time, but maybe 60 to 70% of the time, the very bullish reading will reflect in the price action. In this case, EdgeFinder had a bullish reading. You can go to the history, and we can look at gold, and you can see that we have had a really bullish reading here on the 30th of August, 31st of August. Look at these numbers, 12, 12. So right here, before the breakout, you were getting some really bullish numbers from the EdgeFinder. What happened? We continued higher. So yeah, your edge, you only need to have let's say a 55% win rate and a 1-to-1. So 50% win rate, 1-to-1 reward to risk. No, 55% win rate, 1-to-1 reward to risk. You can make money. Or let's say you have, come on, let's delete this. Let's say you have a 40% win rate, but 1.8-to-1 reward to risk. You can still make money. All about the probabilities. Currently writing the Aussie yen trade. Let's see, Aussie yen. I guess you're bullish. Maybe you're bullish. Again, for me, as a more of a macro trader, more of a swing trader, I take maybe two trades per week. And I would say this is pretty flat and range bound. You know, looks pretty corrective overall on this daily chart. Nick says, nice profile picture. Yeah, so it's a pretty good profile picture from the random Moz guy. I think he has the EdgeFinder on the picture, if I'm not mistaken. Marco, your GP was a monster. Well, it was a monster a couple of days ago. The swaps are pretty high, I'm not gonna lie. So it looked pretty good on Tuesday. Now it's pulling back a bit. This trade, if you're in the A1 Discord, if you're following my signals, it was a signal. Now I have a take profit set at 0.87370, and I have trimmed my stop loss somewhere around 0.86335. So for this particular trade, I want to get out. Okay, I think the overall environment is getting a bit stale. Same as the euro-dollar trade. We haven't had that big reaction I was counting on. I have been paying for swaps, and this has been going on for a few days now. So best to try and get out of these positions, sell the rallies. So hopefully if we get another rally, it hits my take profit and I can get out for a profit, right? If it doesn't, I'll get out with a tight stop loss and I can free up capital. I can look at some other positions. Although right now, there's nothing that is super on my radar, except gold and silver. I'm talking about currency. So yes, gold and silver are amazing, but as far as currencies go, I don't have much to focus on. I'm waiting out the dollar. I'm waiting out the news on the dollar. So what is going to happen? NFP, CPI, PPI. What will the Fed do? And I think a lot of investors are doing the same thing as me. It is being reflected in the price action, just flat and range bound. Most of the pairs that you guys request look flat and range bound. That's just the market condition that we're in. So Random Oz guy bought the EdgeFinder a few weeks ago. Nice. So yeah, you need to think of the EdgeFinder as a tool that improves your trading edge and gives you probabilities. So it doesn't give you a fixed buy or sell signal. I mean, it does, but it's not going to work 100% of the time. So it's all about the probabilities, and you need a large sample size. So a lot of beginner traders, they trade for 1 or 2 months, they make a lot of money, and then on their third month, they lose it all. It's all about a big sample size. If you are looking at a piece of software or a confluence, or you have discovered something in the markets, or you have found some insider information, let's say, it can work for, let's say, 2 to 3 times, but that's not a good enough sample size. At least 6 months, maybe even a year, should confirm that you have a definite trading edge. I've seen so many traders come into the game, they're profitable for a few months, they make a YouTube channel, they post about a bunch of profits, and then they're gone in the next 6 months because they lose everything that they make. So they make 30, 40, 50 grand in, let's say, 6 months, and then in the next 6 months, they lose it all. It's such a common story, and people think they have let's say, a holy grail strategy. People think they have discovered hot water because they're making so much money in a short period of time. But what they don't know is they don't know that probabilities catch up to you eventually. So time is everything. You need to let your trading edge play out on a large sample size. Hopefully that helps you guys to not chase those crazy 10%, 15% per month returns. It's impossible. And that's why I'm saying it. A lot of gurus, they make that percentage in a few months, but it's not sustainable. CAD yen. See, I mean, every single pair that I look at is looking like this, sort of on the daily. Ascending, descending, ascending. Let's check out CAD yen on here. CAD JPY. So negative reading in terms of the fundamental analysis. Again, for the yen pairs, I'm being a bit patient as well. I need to do more research. I don't have a clear bias on the yen. I think the CAD could be a bit of a weaker currency because I believe they're facing stagflation as well. In my opinion, the pound is the worst currency, so the worst performer in terms of economic data. They have bad GDP, they have high unemployment, they have rising inflation, so they are definitely in a stagflation scenario. CAD could be there as well, and that's bearish for the underlying currency. Now, I would prefer to pair the CAD with something else, maybe not the yen right now. And technical analysis here looks a bit flat. Best tip I can give to people that use the EdgeFinder, just follow COTS. Like I said, the EdgeFinder said that Aussie yen is bullish, but 81% of COTS are shorting the Aussie, while JPY 66% buying the JPY. Okay, if it works for you, then that is great. Okay, if it works for you. What I noticed when I'm building a trade, I need multiple confluences, 3 minimum, right? 3 confluences are sort of a minimum. The more confluences you can stack, and they should come from different forms of analysis. So you have technical analysis, fundamental, sentiment, seasonality. Then you can have some insider information. So there's all sorts of stuff you can slap on top of each other. What I would not do is I would not take 4 technical indicators and build a trade on top of that. Because in that case, you have just one input. That is the price. So you're kind of using just one input to make a trading decision, which is not going to give you a great edge. But if you're combining the COTS with, let's say, technicals and something else, I think that's pretty good. And if it works for you, keep doing it. Just wait to have a big enough sample size to start increasing your risk. Okay, at least 6 months, I would say that's the absolute minimum before you start increasing your risk, maybe buying prop firm challenges and stuff like that. Okay, thoughts on gold. So I'm gonna end with that because I have reached the end of my segment. Gold and silver, I'm gonna repeat what I said. My favorite things right now, crypto. I'm also looking at crypto, but crypto is in the dumps. Ethereum is also super flat, but Bitcoin is also selling off. Just wanted to mention crypto. So gold and silver, my absolute favorite things right now. What I believe is happening is big investors are back on their desks. You have rate cuts incoming, printing of money. Big players are expecting inflation. That is why they are maybe selling US bonds and going into things like gold and silver to protect their capital, to hedge their risk on positions. And I think the buying is going to continue. I also think we're now a bit overextended. So I would like to get a pullback. This is my forecast. Pullback, I get in, price continues going up. So I'm going to bet money on this sort of a position. If it doesn't work, it doesn't work. But I think there's a pretty high chance it is going to work. So that's about it. Thank you guys very much for watching. I'll catch you next week and we can comment on the NFP. I'm very interested to see what the NFP will turn out tomorrow. So take care. See you.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.